Hey guys, so in this video, we're gonna talk about what's happening in the Philippine markets, what the chart is telling us right now. Where is it headed after the long Holy Week break? And as you all know, I already gave you my video on my take on the U.S. markets, my global outlook, and the charts there as well. And let's try to also compare, the difference between how the chart with the Dow Jones versus the Philippines would look like. Are they moving in a similar manner? Please do note that one of the differences is that the Philippine markets were already bearish way before the coronavirus even started. While we were going down, while we were trading in the lower range of a sideways market, the Dow Jones, the US markets were hitting high upon high. And it's only just the past few weeks where we saw the Dow Jones start to go down. And the thing about the Dow Jones is that it already rebounded, and it has rebounded massively also from its lows. No, even I mentioned this in the previous video, but I think this is worth mentioning right now that from intraday low to intraday high, it's 31.9% up, but from closing to closing also, it's 27.6% up as well. So measuring it on terms of how it bounced up. But please remember also that there's a different scenario in the US. There's still a lot of cases of the coronavirus in the US plaguing them, and above and beyond. A lot of cases of coronavirus, unemployment is massively high already. I placed a video on how big the unemployment numbers are, but this movement that you're seeing is pretty much predicated on the stimulus package of the US worth 2 trillion US dollars as well. So now let's look at the Philippine markets. If you guys are excited, comment I'm excited. Comment I like to analyze the Philippine markets more. Anyways, before that, we're gonna analyze the charts, but I want to also open up and talk about certain things that could have triggered movements in the Philippine markets, or that could be uh, things that investors could be looking at as decision points for them whether to buy and sell. By the way, what I didn't mention also is this: the move that we saw in the U.S. markets, the move that we saw in the Dow, very very interesting. The move that we saw in the Dow Jones was basically one of the best stock market moves that we've seen in the U.S. for the past 45 years. We haven't seen like that as well. So, anyways, going back to the Philippine markets, going back to what's happening from a multinational perspective. Also, I want to mention this, that because of what's happening in China, and I've said this in a lot of videos, uh, this may cause a lot of multinational companies, from the grand scheme of things, no, to really not be reliant on China as well. The thing about that is the global supply chain has been pretty much reliant on China, and because of its reliance on China, because of it focusing on China, the closure of some of their factories as well has created, no, a glut, and a lot of people are now trying to find ways on, what could I do so that I'm not basically hit by all of this as well. So that's one of the things that you have to note. I just want to mention this, and this is something worth noting for the Philippine markets as well. Because of what we're seeing, one of the things that the Banco Central could do, I think Jokno said this, but I'll make a deeper video on it. I think they're gonna cut their RRR, reserve requirement ratio. What that basically does is it allows banks to lend more money. Having lending more money infuses more cash into the system. Having more cash in the system protects banks also from having a credit crunch. More money into the system means that they could also loan out more money. Loaning out more money, it means they can be also more liberal also on giving out cash in times like this. Because please remember, when times are bad, when economic times are not so good, the problem there is that banks will try to preserve their cash, they'll try to preserve their money, they'll try to be more stingy in giving out loans. And if they're being more stingy in giving out loans, there will be a lot of businesses that are currently in trouble that may need those loans as well. So it's a chicken and egg solution, that one of the reasons why they're slashing it, so that there will be more cash available uh, for people who may need cash at this point in time. So this is part of their ways also on, I guess, stimulating the economy. They've already done a couple of things as well. They've also done some injections of cash into the economy. They've also bought some, as you all know, I mentioned this in a previous video, that SSS, GSIS also buying into the equities market. It's, I guess, they're also doing it to not just to help. No, they're gonna do it also to buy stocks at a very very cheap price. Please remember, when SSS and GSIS would buy low, it also poisons them and gives them an opportunity also to get higher dividend yields. But above and beyond getting higher dividend yields, it also gives them an opportunity that, hey, what's gonna happen when this stock start going up later on? So they also have a potential for capital appreciation as well. That being said, let's look at the Philippine markets. First things first, I'm gonna post a video of Jollibee later on at 8 p.m. tonight. For those asking about stocks by request, hashtag Jollibee. That's the whole content of it. We're gonna break down Jollibee. We're gonna break down the news about Jollibee. It slashing its capex. We're also gonna break down what the charts are telling us as well. That being said, also I forgot again. I always forget to introduce myself. My name is Marvin Germo. I'm a stock market trader and investor. I've been investing the market for more than 10 years now. I think 10, 11, 12 years already. And if you're new to this channel and want insights on the markets, on investing, on personal finance, and then for this particular video, technical analysis, charting, analysis of where the market is going, please subscribe and smash that bell so you get updated every time I come up with new content about investing. And by the way, guys, I also have a second channel. It's called Stock Investing Made Easy. Those are infographics which aims to teach people the basics of investing on a very, very relatable, very, very visual manner as well. So the link to that second channel is in the description below. Super appreciate it, guys, if you could also support it as well. Now, into the charts. As you can see here, and it's very, very consistent still, the breakdown from this support level is what triggered everything. This happened January, but if you noted also way before that, for those who followed our Stock Smarts training sessions, this is a very, very significant breakdown as well, from when all of the moving averages start to converge and break down from a very, 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 very short term level. And after that, we saw this boom, large movement of the market headed downward as well. After that, no, after the breakdown from the 7.5 level, and I've mentioned this in a lot of the interviews that I had in Bloomberg, that I mentioned that the market was moving sideways, that it was a 7.5 level that was protecting us. And if you look at it here, it's very, 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 very consistent. Look, hits the 7.5 level, bounces up to 8.2, hits the 7.5 level, bounces up, but not anymore into 8.2, bounces to 8,000, hits the 7.5 level, but after that, it started to break down. If for those who are very, very strict and want to analyze downtrends very, very well, you see this as a high, you see this as a high, you see this highs declining, meaning a lower high already. It's already a textbook definition of how a downtrend would also look. And this one was just a nail in the coffin. This one was just an icing off of it, but you already have had moving averages confirming all of it as well. That being said, that's how powerful support levels are. When a strong support is broken, similar to this: strong support, strong support, strong support, strong support, strong support, but it got broken, a large breakdown would also follow. And that large breakdown from here brought about this intraday drop, 46%. And if you're just going to size it from there, it was around 38%. That being said, though, let's try to zoom into where the charts is. As of this point in time, you now have this. I could draw a resistance level here uh, because if you look at it, it tried to build some sort of a support from the end of February to the start of March. Then it started to break down from that. So we could make an assumption right here, right now, that this Feb 26 support level right here, right now, will also poise a resistance level over the next few days, or should there be a challenge for it to move upward. That being said, also, you now have two specific resistances. One is the very, very, very strong resistance from the 7.5 level, which is also being confirmed by the 200-day moving average, and other resistance from the 6686 level. So, that being said, it means a couple of things. Number one, should you see the market move up, next possible area where it may have some selling is this, the 6686 level. Should it fail to break out from that, then a necessary pullback, uh, a necessary retracement is possible. Because if you note it also from the intraday lows, hitting that is already 64%. From the closure, it's already 42 plus percent as well. So there will be people who will be tempted to take profits. And please remember, I made a video on what would cause the markets to start to reverse a vaccine, a lowering of the curve. You have peak panic selling to go out, but unless you see something fundamentally that's gonna trigger people to buy, then they're not gonna buy higher, and they're just gonna take profits because there's still no signal, there's still no sign of things getting better. So that being said, if you see prices move up but there's still no change in the vaccine, there's still no change on the cure, there's still no the growth of the coronavirus hasn't really tapered down, then you may expect it that people will want to sell, people will want to take profits, and getting a 42.8% gain, getting a 60 plus percent gain in a span of a few days, in a span of a few weeks is not that it's not bad at all. People will take that as an incentive also to take profits. And if you do note it also from the intraday lows here to where we are right now, it's already up 38% from the close of that day no, when the market was sold down. It's also up more than 19%. So it may be a cause also for people to somehow want to get out of that position as well. But if there's a glimmer of hope for those who are more bullish about these two things, number one, MACD is still continuing and showing us that there's still a change in direction. It's foreshadowing this from it dropping. The change in direction was a push up as well. That's one. Number two was the breakout from the 20-day moving average. So if there's one thing that you want, for this to really stay afloat is number one, it stays above at least the 5570 level, and number two, it stays above the 20-day moving average. So two things. This is a conditional scenario, no, that if the PSEI stays above the 5570 slash 5571 level, that's when this entire condition where it could push up here to the 6-7 level will be valid. And second is it needs to stay above the 20-day moving average. So please do take note of this. The movement to 6686 is predicated on the PSEI staying above the 5571 level and staying above the 20-day moving average level. This is supported also by the change in direction that the MACD is actually telling us as well. That being said, though, if it does not hold that level, possible retracement, short-term retracement would be here. You could peg it at around the 5-1 level. So possible short-term move, it could consolidate and oscillate in a very, very thin level. If this does not hold, then all bets are off again. It could go back to the 4,000 plus level as well for the short term. So again, I'll repeat it, 5570 as an area that needs to be looked at, that it needs to stay above that level, that as it stays above that level, it gives the market a shot to go to 6686. If that level does not hold, then there's a narrative that it could slide down to 5121. If 5121 does not hold, then there's a narrative that it dips down even back to the 4,000 level. Because please remember this, if you look at the trend line and you look at the longer moving averages, they're still pretty much bearish. And the longer the moving average are, that's what dictates what the trend is as well. And the underlying major trend, even if you look at MACD, we still haven't crossed the 0 plus level still. So that being said, the stronger trends are still telling us that bears are still in control, but there are short-term movements upward that are telling us that there are some buyers that are into the mix as well. So there. I want to know your thoughts about this. Comment below. Comment buy if you believe it's worth buying already. Comment sell if you believe it's worth selling. And by the way, guys, if you guys have any other stocks that you guys want me to analyze, I'm going to make more videos this Sunday. I'm going to post them also as soon as possible so you guys can analyze them before the markets open tomorrow as well. Comment the stocks that you guys want to put in. Put in the stocks / stocks by request, and I'm going to make a video off of that as well. And if you want to be part of the vlogs, comment I want to be part of the vlog, and then let's see how we can integrate your question or whatever you want to learn as part of the vlog as well. And there, what else? Online courses below, or all in the description below with Chinkee Tan, Stock Market for Everyone. It's a Tagalog stock market course, and we also have Make Money Grow Money with Sean Si. Comment Chinkee Tan if you want to join that course. Comment Sean Si if you want to join Make Money Grow Money. I also have books. They're also in the description below. You can just look at the links at the description, click them, and all of the details on how it can be delivered to where you are in the world will also be there as well. And there, I hope you guys got a lot from this video. Super appreciate it if you could like this so that more and more Filipinos, more and more people get to see videos like this across YouTube as well. And if you're new to this, super appreciate it if you could subscribe. And if you notice it, the way I analyze stocks basically is just purely charts. No hype, no speculation, no guessing, no forecasting. Me not relying on other people, because that's how you win. That's how you can trade the markets with confidence. When you have a set of rules, you have a set of strategies that you follow to the very, very letter. And please remember this: technical analysis is not so hard to understand, but it's also not so easy. Also, that you come in not knowing what you're getting into. It also takes time. It also takes discipline. It also takes you pushing yourself to work hard for it, because anything that is significant, anything that's long lasting, anything that will bring you towards financial freedom is something that you also have to work hard for. It's also something that you have to spend a lot of time to get better at. It's also something that when everyone else is trying to entertain themselves, you're the one trying to push up, push forward, and trying to do better, and trying to build a skill, and trying to learn. So my suggestion: keep on learning, keep on hustling, but once the market opens, whatever you learn, deploy capital, practice. You always have to put money into it. You always have to experience it. You always have to put money into that trade, no matter how small it is, because this is what I believe: the market is emotional. You don't lose in the market just because you made the wrong analytical choice. You will lose in the market because you see your money dwindling, and you don't react based on your strategy. You react based on your emotions. And whatever you learn here, I'm not here to entertain you. I'm here to educate you, to cause you to execute, because that's what's going to cause you to be financially free as well. So whatever you're learning here, please don't just let this stay here. Execute it, practice it, build your skill. Use this lockdown. And what's so interesting about this lockdown, while everything's closed, the stock market is still open. And that's what's going to allow you still to grow your skill, make your money, and allow you also to build wealth over a long period of time. And I'm saying this because I really believe that the stock market still is one of the greatest ways for you to create wealth. The stock market still is one of the greatest ways for you to build wealth over the long term. But it's not get rich quick, it's get rich right. It's not get rich quick, it's get rich with the proper process that you need to really roll up your sleeve and learn. So, again, one thing before I end: the 200-day moving average is at the 7560 mark. For it to have any significant reversal upward, we really must break out from that level. And after that, we have a lot of resistances still that we need to break for the markets to proceed even higher as well. But rest assured, every step of the way, I'm just gonna update you. I'm gonna give you as much information about this as possible, because again, that's what this channel is for. We're gonna be here to educate you and give you as much details as possible. So that's it for now. This is Marvin Germo. I hope you guys got a lot from all of this, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.